Welcome to our weekly report where we've created a real-time track record of our market forecasts going back several years. Next market, we're going to take a look at the 800-pound gorilla in the room, so to speak, the Swiss franc. Here's a weekly chart of the Swiss franc. You can see that massive move down in the dollar Swiss. Here's a look at the monthly chart of the Swiss franc. What did we say last week? I pointed out, boy, there's a whole lot of room on the upside in this market, isn't there? Well, that's the way I view it now. If I thought there was if I liked all that room on the upside last week, I love it now. You see some lines on the chart I have here drawn. That's essentially a buy zone for us, and the bottom of that zone is 625 or so. That's a GAN level. In Dow theory says that the market can retrace up to 2/3 and maintain its overall direction. So in this case, you haven't retraced 2/3. That's why we still like the Swiss franc, dollar Swiss, on the upside here. So big move, and that's why we have to put a disclaimer on the report, because no doubt about it, trading is risky overall. Our overall strategy has been long the dollar index and short the euro, because that's where you have all the negative fundamentals in there. But we still like dollar Swiss on the upside. If anything, this market to me is safer to trade or safer to put investments in for what happened Thursday now, because essentially they were just unwinding what had happened here. Here's when the Swiss National Bank tried to peg the currency to the euro. They didn't want their currency getting so strong they lose advantages there. So they set that peg to the euro here. I remember one of our students, Gordon, saying at the time, I'll never trade the Swiss again, he was saying, because you never know when that central bank can come in and do something crazy like that, as they did here. Well, here's when they tried to intervene in the market. It didn't quite work out. Here's where they unwound it. So here's where they intervened. Here's where they took off the intervention. Essentially now the market's free to trade the way it wants to. And as I said, hey, last week looks like there's a lot of room on the upside. Now, from my perspective, now there's even more room on the upside. So it's going to be interesting to see how this market goes forward. But for our money, we kind of like we'd be pretty comfortable now with actually setting up starting to dollar cost average this market on the long side, dollar Swiss. So yeah, I like dollar Swiss more than ever. You had a higher high here, and now you're putting in what potentially is going to be a higher low. So we'll have to watch this market long term. Switzerland is still Switzerland. They're surrounded by Europe on one side. Essentially, you've got the Middle East on the other side. It's a landlocked country there. We don't see it being able to compete like it used to against the different trading platforms around the globe. So we definitely like the U.S. dollar over the Swiss, and that's our view of what happened there. My name is Jay Norris. I teach trading at Trading University. Thank you so much, and we look forward to seeing you next week.